Hello guys, good evening. So our lesson is regarding bonds and stocks, and these are the different learning objectives from this learning material. Number one, differentiate bonds and stocks. Number two, enumerate the different kinds of bonds and stocks. Number three, journalize transactions involving bonds and stocks. Number four, solve problems involving bonds and stocks. So there are different types of stocks, and these are listed as follows. So first, we need to discuss stocks and corporation. There are several reasons why a corporation issues stock to raise money. Some of the more common reasons to use the money include company operating expenses, capital, advertising. So kaya kailangan po niya daw ng pera because of, or kailangan niya po ng investments because of yung mga to po, kailangan niya po ng pagpatakbo ng negosyo, okay? Kailangan po ng additional capital, kailangan niya po ng pera to advertise the products na meron po ang corporation. Stocks represents the shares of ownership an individual or business has in a common company. Diba yung sinasabi ko na has in a company. The rights granted to an owner can vary depending on the stock. Stocks are grouped into either one of the two types, common stock or preferred stock. Common stock, the basic type of a stock a company issues is referred to as common stock. There are no restrictions placed on who can buy with common stock. With common stock, shareholders have an ownership interest in the company that entitles them to a portion of the earned profit. So either common or preferred po meron sila. We are entitled po with this one, profits. Those who invest in common shares usually receive at least one vote for each of their shares. Okay, so I do not need to read all the data. Common growth stock is considered the most familiar type of stock or corporate stock. Owners of this type of stock reap two benefits. Number one, they're entitled to vote in the shareholder elections, and any increase in the corporation's value is a plus. Dividends paid to those who hold common growth stock is at the sole discretion of the board of the directors. Many company boards never declare dividends for common growth stock. So one of the purposes of this is para tumas po ang value ng isang stock. But at the end of the day, you will invest from this kind of stock, you should be a risk taker po. So you do not know if tataas nga po ang value ng stock or bababa po. Now let's go to common stock, common income stock. A mature company such as public utility company will rarely see a sudden increase in the value. Investors in these types of companies types of companies are generally rewarded with regular high dividends. Holders of common income stock often have the same benefit as common growth stock in that they have the right to vote at shareholders' elections, whereas preferred stock stipulates dividends must be paid. Common income stock had no such contractual obligation. So kung wala na pong what they call this one, kita, after paying the prepaid, so wala na po. Wala na ma-receive si common stock. So mas conservative naman daw po sabi ko dito, common income stock over the common growth stock. Kasi siya sure po na meron na pong kita compares sa isa. Kasi ang purpose ng isa is what if tataas po. Yung isa is kukunin ko na po. So hindi na po madadagdagan po yung kanyang value po. So that is the difference between the common growth stock and the common income stock. Preferred stock has advantages over common stock. Number one, most preferred shares are promised a dividend. Number two, in most cases, common stock do not receive a dividend before the promised dividend is paid to holders of preferred stock. Preferred stock do not have the voting rights but to have the right to company assets kung mabankrupt sila. So, if the company will experience bankruptcy, ang unang mababayaran out of that assets ko or net assets ko will be the preferred stock owners ko. Callable preferred stock, because preferred stock really appreciates in value as the company expands and grows. Though those who invest in preferred stock run a lesser risk of losing their entire investment. In the event of bankruptcy, the corporation must reimburse callable preferred stockholders first. Also, company must pay preferred stockholders every time a dividend is declared. At some point, holders of preferred stock may allow the corporation to redeem the stock, sell it back to the company by a certain date of specified price. This happens when the corporation can negotiate a more favorable dividend rate po. So, pwede pong ibenta yung preferred na hawak po nila in a specific date and with a specific price. For convertible preferred stock, pwede po silang ma-convert into preferred stock po. If the corporation has a sudden increase in its value, another benefit is the holder may trade their shares of common stock by specified date. Additionally, by holding convertible preferred stock, an investor can balance both the growth and the income to their advantage. Journal entries for the issuance of par value stock. At par, yeah, this one at par. Push it. So debit cash, credit common stock, debit cash, credit preferred stock. So sole proprietor po yan, debit cash, credit owner's capital. Above par, so i-credit po natin sa additional paid-in capital, yung sobra ng par po. Okay, so i-account natin. Below par, pero ito po is iniwasan po. Ayan, so I hope nakuha po natin. Now let's go to the bonds naman po. There are different types of bonds. So bonds payable is under the what's that, non-current liability if the problem is silent. But still it can be, I told this one again, current liability po. If sinabi pong short term po siya. Okay. Now let's go to the different types of bonds. Collateral trust bond. This bond choose the investment holdings of the issuer as collateral. So may collateral po. Convertible bond. This bond can be converted into the common stock of the issuer at a predetermined conversion ratio. So pwede po siyang i-convert. For example, magbabayad po yung nakautang, what they call this one again, nagbabayad ka po. So pwedeng pambayad mo po will be the stocks po. Debenture, this bond has no collateral associated with it. A variation in the subordinated debenture which has junior rights to collateral. So walang collateral po yung utang mo. Deferred interest bonds, this bond offers little or no interest at the start of the bond term and more interest near at the end po. So mas marami daw po siya interest kapag malapit ang mag-end yung bond. Guaranteed bond, the payments associated with this bond are guaranteed by a third party po, which can result in a lower effective interest rate for the issuer po. So yung iba kumukuha po ng insurance. Yan. So para po if ever po masagasaan like that, so may insurance po siya. Like that one po, yung third party po. Income bond, the issuer is only obligated to make interest payments to bondholders if the issuer or a specific project earns a profit. Mortgage bond, this bond is backed up by real estate or equipment owned by the issuer. So real estate like lupain, like the building, like the apartments. Serial bonds, these bonds are gradually paid off in each successive year. So the total amount of the debt outstanding is gradually reduced. So, installment po siya. Variable rate bond, the interest rate on this bond varies with the baseline indicators such as LIBOR. Ayan, so may karoon pong mosquito dyan. Okay. Zero coupon bond, no interest is paid on this type of bond. Zero coupon convertible bond, this variation on the zero coupon bond allows investors to convert their bond holdings into common stock of the issuer. So I hope na po natin the differences among the different types of bonds. Zero coupon bond, walang interest. it can be converted, allows investors to convert their bond holdings into the common stock of the issuer. Pero wala pong interest po. Okay, so accounting for bonds issued at premium. So the formula, the journal entry for this one is debit cash credit, premium on bonds payable, credit bonds payable po. So you need to amortize the premium on bonds payable for the yes. Okay. Then for the accounting for bonds issued for debit cash, debit discount on bonds payable, credit bonds payable. Need to amortize the discount on bonds payable until magkaparehas na po sila. 100,000. Ayan, so there is an activity and assessment for this learning material po. So I hope na po natin the difference between the accounting for bonds premium and accounting for bonds discount. Okay. So let's read kasi hindi ko na binasa. And we need to analyze. Suppose that on January 2, 2020, Valenzuela Corporation issued 100,000 5-year 12% term bonds, interest payable semi-annually on what's that, January 2 and July 1. In this case, however, the bonds issued in the prevailing, the face value is 100,000. For such investment is 10%. The bonds therefore are issued at premium yield to 10% interest and are sold at price of 100. So what's that again? So mapapansin niyo po. Okay, so ang effective interest rate po niya is 10%. Okay? While under this face value po, which is 100,000 is 12%. So mas mababa po ang effective interest rate kapag what's that again? Bond premium. So you can see from the illustration po. Ayan. While for the other one, kung mapapansin nyo po, the corporation decides to market interest rate po niya is 10%. Diba? Compares kay 9%, so mas mataas po si market interest rate under the bonds issued at a discount. Okay? So I'll go back with the learning objectives from this learning material. Differentiate bonds and stocks. Enumerate the different types of bonds and stocks, journals, transactions involving bonds and stocks, solve problems involving bonds and stocks. So I hope nakuha po natin the different objectives from this module. Again po, maraming salamat po and God bless.